Today, the British pound, the euro, and the US dollar released quite some very key news. You can see the British pound released the CPI year over year and it was beautifully bullish. The euro released some trade balance information and which also were quite bullish. But then the US dollar released its PPI, which was flat, though that is also negative. And also the cost PPI numbers are flat, which is also negative. But even with all of this, you can see it right here against the euro. You see that flat drop on the 4 hours when news came. The same thing on the British pound against the euro. Up push and down push at the same time. And then on the US dollar against the Japanese yen, you can see the news reaction was quite different. There was an up push and then later a down push. So you all know I have a fundamental analysis calculator which does the job of looking at the fundamental situations for me and telling me exactly what's happening based on the news. And then I incorporate a little bit of COT data into that, then tell myself a direction. So let's look at what that whole calculator is saying right now after the release of such amounts of news from 3 major pairs in the markets. So today we can see for the first time in a long time, my calculator is saying that the weighted bias of the market is bullish in 3 markets. The Swiss franc, the euro, and the New Zealand dollar are clearly giving me completely bullish stance. For it to be bullish, it has to be above 60%. So at 60% and above, I get a bullish signal. Though you can see greens below the 60, it's simply just telling me that this is heading towards the bullish side. One of the things you will notice here is that the New Zealand dollar has a very strong economic stance right now. Absolutely outstanding. And then also, you can see that happening also in the euro with only 2 things having issues, which is the unemployment and employment change. And then for the Swiss franc, you can see that the only problems they are having right now is their retail sale data and the producer price index. This alone tells you that these currency pairs are the pairs best performing right now in the entire market. Coupling that with the COT data, you'll find some little bits of nuance to whether you should buy or sell. But one of the currencies you should really be looking at buying right now with the COT data is the Swiss franc. As you can see, it is bullish and the commercial traders are strongly bullish on it, even though they had a slight bearish trade in their total changes compared to the week before. Now looking at this data here, we would normally weight it out by looking at the largest to smallest, and in that case we'll end up having these to look at. But take note, for me these weights are only about the economic news. I want to compare that, pairing it with the COT data, and instead I get to look at these sets of currencies. Now I like to look at something at 45 and above and 55 and below. So it means filtering this to fit that situation, we have the following currency. So apart from the majors, it seems like only the minor pairs are appearing here right now as something to really look out for. Let's take this into the chart. So looking at the daily situation of the euro right now, we can see that today's candle is absolutely insane with a huge wick below and a long wick above. I do have a buy order right here and I'll show you exactly why that order is there. So starting from the daily time frame, what I can see right here is we have a good zone. Not so good, so let's see how good it is. Following the Fibonacci, it is right underneath the 50% retracement. That is, it is on the premium, it is on the discount area. And going from that, I'm going to go through with my strategy, go to the 4 hours. We're looking for a possibility of a choke. You can see that pattern erupting slowly. If you can't see it clearly on the 4 hours, let's take it down to the 2 hours where it becomes quite evident. So if you do not know the pattern of a choke goes like this. The choke goes like this. You want to see a downtrend with at least 2 like this. And then you want to see price sweep below the low and break above the high. Then I would wait for a demand zone. The demand zones within this move up, I'll wait for price to come for a retest and you trade it upwards. So that is exactly what you can see here, putting the pattern close to each other. You can see that this was a sudden move up, just like this, and price is coming down for a demand zone. So I'm focused on trading from this demand zone to see if price has a good move or a choke for us even if it's just to this upside or even higher. And backing this up with the fundamental analysis, you know that the euro is highly strong, and against the US dollar, it is a better market to look at right now in terms of simply the weight. But the COT data is saying quite otherwise, and that doesn't mean we are not watchful of our trade. Looking into the British pound against the US dollar, we have the exact same scenario happening here. We have a daily demand zone right here. I can put up the Fibonacci retracement, and you can see like that is a very extreme zone for the daily. It is really extreme. But putting on the 4 hours, and in the 4 hours you can already see the truth quite clearly. But if you're not seeing it clearly enough, let's go down to the 1 hour, and you can see that truth right there. Price comes down, makes 2 downtrend, an uptrend cutting above it entirely, and we are sitting down right here at the demand zone. And backing this up with the fundamental analysis, you know that the euro is highly strong, and against the US dollar, only take this with a grain of salt. This is my own analysis, my strategy, and this is what I feel the market is going to make it. Now, looking at the US dollar against the Japanese yen, let's take a good look at what is happening here. Now, we can see that both of them are not so far away from each other. In other words, this market is quite neutral. The only power we're seeing here is that the COT data tells us the commercial traders are likely going more for the dollar and seriously dumping the yen. Hence, looking at this chart right now, on the weekly, it is absolutely consolidating. On the weekly, there is no clear higher highs and higher lows. We'll go down to the daily to see if we can get some better analysis. We do have some small higher highs and higher lows, but it is not clear. You can see right here, there is no clarity except for this final break above the high. But even above this break, there is a clear supply zone standing and seriously being mitigated. So I would rather just sit and wait and watch this market do whatever it's doing for the time being until it starts to have clear zone. I know some people are going to be looking at the market structure like this. People are going to be looking at this market structure like this, which is also a good one. But if I'm looking at it like that, it should be on the 4 hours structure. So this to me is something you should be looking at from the 4 hours perspective. It is a good perspective to look at it. It is also giving you that clear substructure of higher lows and higher highs, which is what you want to be looking for in any uptrending market. But however, because of the fact that I am seeing a clear supply zone right here on the higher time frame, I'll be a bit skeptical about this and not just dive straight into it. Now, this market is absolutely crazy, and I know everybody thinks differently. I would like to see what you think about the market in the comment below. Also, there's this other video where you can learn to use the zigzag indicator. I don't know if you heard of it before, but the zigzag indicator is going to show you clear market structure, and it's going to be right here for your use. Also, there's a playlist here for analysis we do daily. Every day, you can go back there and see them. I also have some weekly, daily analysis there, which could still be in play, which you can look at. Until then, I'll catch you all in the next video. Peace.